Last week, I went to a crypto conference in Miami. 3 days worth of talks of NFTs, Bitcoins, macro trends. I arrived interested in crypto, and I've left thinking I need to invest in silver. Not gold, not more Bitcoin, silver. A metal I'd never even considered, never researched it, never even thought about it. But here's what I learned. The technology shaping our future, solar energy, electric vehicles, AI, 5G, they all depend on silver. Not as a nice to have, but as an essential component. And right now, we just can't keep up with demand. So let me explain what I mean. Most people think of silver as a lesser version of gold, something that doesn't appreciate in value that much, something that your grandmother would keep in her drawer. But silver differs from gold in one specific way. It has industrial demand that is growing exponentially. Every solar panel, every electric car, every smartphone, every data center, they need silver to function. And here's the problem. We can't produce enough of it. New mines take 10 years to build. And like 70% of supply is because of a byproduct of mining other metals. So this is a supply crisis hiding in plain sight. So how did I hear about this? A friend of mine from Hampton said, I'm thinking of going to Miami to go to this conference from this guy called Raoul Pal. He said, you want to come? And I recognize the name Raoul Pal because I've been watching these, when I research Bitcoin, I watch YouTube videos and I can see his name pop up quite often. The videos are quite long, but the content is quite interesting. And I thought, I'm interested in this guy. And I've been wanting to go to Miami for so long. So when he sent me the conference details, it's called the Real Vision Crypto Gathering. It was run by Raoul Pal and it was in Miami, and I was sold. I was like, I'm coming. I checked my diary, I could do it. I said, let's go. And I remember when I arrived in Miami, everyone was speaking Spanish to me. I felt right at home. So the conference started on a Thursday afternoon. Raoul Pal had this session on stage, and he was talking about the state of crypto, and he was kind of blaming people, bringing people on stage and blaming them for why crypto is underperforming. And the message from that session was pretty clear. Bitcoin's going up long term, even though it's not performing very well right now. It's a store of value. It's a hedge against inflation, and I believe that too. What caught my attention the most is when they said we haven't had an altcoin season yet because the money that normally flows from Bitcoin into the altcoins has flowed somewhere else, and it's flowed mostly into precious metals, and mostly silver. And that's unusual. In previous cycles, the rotation from Bitcoin to altcoins happens like clockwork. Bitcoin peaked last year. It got to like $126,000, and then it crashed down to 80, and then it recovered back up to 90 towards the end of the year. It basically finished where the year started. But the explosive altcoin season everyone was expecting never arrived. And the question became, where did the money go? And the answer, according to many speakers in the conference, was to precious metals, and specifically silver. I sat through talk after talk about silver, about the supply constraints, about supply and demand, about why this metal is different. I walked into the conference without any interest in precious metals, and I walked out thinking I'd be missing something obvious. Let me explain the supply side first, because that's where the thesis starts. Silver's been in deficit for the last 5 years. That means there's been more consumed than it's been produced. The shortfall from 2021 to 2025 is around 820 million ounces, which is around 23 million kilos. To put that into perspective, that's what basically 1 year of mining production equates to. Just gone. Consumed from existing stockpiles. And why can't this be easily fixed? First, 70% of silver production is a byproduct. It's because silver comes out of the ground alongside other precious metals like lead, copper, or zinc. Mining companies make decisions based on those metals, not silver. Even if silver prices were to double, mining operators wouldn't just start producing more silver. Think of it as if you're running a SaaS business and your main product is a CRM, but you happen to produce some extra analytics data on the side, and somebody wants to buy more of your analytics data. You're not going to restructure your main CRM business just to produce more analytics data, right? You just keep optimizing your business for the CRM, the main core business. That's how silver mining works. It's a byproduct of other mining operations. So you can't just scale it up when demand increases. Second, new mines take 7 to 10 years to develop. So from discovery to commercial production. And that's assuming all the regulations and financing go smoothly. There's no quick fix. You can't just spin up some more mines like you do some cloud servers. The infrastructure doesn't exist. The permits take years. And third, ore grades, which is how much metal is in the rock, are declining. The easy silver has been extracted already. What remains is lower quality. Mining companies have to process larger amounts of rock to get the same amount of silver out. Costs then rise. It's like the early days of tech. Easy startup ideas have been done. Now you got to dig deeper for an opportunity. It's the same dynamic in mining. So we have a market where demand is accelerating, but supply can physically not respond. The normal commodity cycle is demand increases, prices increase, supply increases, prices lower. Doesn't quite work for silver. It's because the supply is structurally constrained. It creates what I think of as a bottleneck. The same way a database bottleneck would impact your app's performance, irrelevant to how much traffic you want to handle. Silver is becoming the bottleneck of the technologies we want to build. Now let me explain the demand side, because this is where it gets interesting. Industrial demand for silver reached a record of 680 million ounces in 2024. It was the 4th consecutive annual high, and it's accelerating. Solar panels alone consume 197 million ounces annually. Global installed solar capacity is projected to triple, more than triple, triple in the next 4 years or so by 2030. From like 2.2 terawatts to 7 terawatts, and more panels means more silver. Electric vehicles need like 25 to 50 grams of silver per car. That's like more than double of what a normal car would take. And as EV adoption increases, so does the demand for silver. By 2031, EVs alone are expected to consume 94 million ounces of silver annually. AI infrastructure requires data centers that need like 2 or 3 times more silver than a normal data center. Global data center power capacity has grown from like 10 gigawatts in the year 2000 to 50 gigawatts now. Every percentage point increase of demand in computing represents an increased demand of silver. Your smartphone, for example, contains between 200 and 300 milligrams of silver. A laptop's got like 750 milligrams, and gaming consoles have got like 2 to 3 grams of silver. And there's billions of devices like this manufactured globally. And even though it's small amounts per device, because there's so many devices, that equates to a huge demand. 5G networks, another example, they require silver in their antennas and base stations. Current 5G demand is around 7.5 million ounces globally, but is projected to reach 23 million ounces by 2030. That's like a 3-fold increase as 5G infrastructure builds out. And here's the critical point. Silver represents such a small fraction of the total cost of these products. It's like 0.5 to 2% of the total cost of a solar panel. If silver prices were to double, the impact on installed systems is minimal. It'd be like under 5%. It's not enough to slow down the adoption. So manufacturers will pay whatever it takes to maintain the supply. This is what they call price inelasticity. It's when the demand doesn't decrease meaningfully, even when prices rise. Compare this to gold. Gold is a store of value. Central banks buy it. Investors hold it during uncertainty. But there's no exponential growth curve with gold tied to technological transformation. Maybe compare this to Bitcoin as well. Bitcoin is speculative. There's no physical utility. Its value rests entirely on network effects and adoption. Silver sits at the intersection. It's a store of value with monetary history, plus irreplaceable industrial applications in the technologies defining our future. That combination is what makes the thesis compelling. I wouldn't be giving you the full thesis without addressing substitution. This is where I spent additional time researching after the conference, because the bullish case that they were presenting seemed almost a little bit too clean. You see, I learned that copper is already replacing silver in solar cells. China's LONGi, the world's largest solar manufacturer, announced plans to produce copper metallized cells this year. Copper-based cells can reduce the silver requirements by like 50 to 90%. Also, carbon-based materials are emerging in electronics. Constraints fuel creativity, and I've said this before. Between the 1990s and 2017, the electronics industry reduced the content of silver in capacitors from 7 million ounces to like 0.5 million ounces. That's like a 93% reduction, whilst device production exploded. See, engineers find solutions when economic incentives align. This creates what I think of as a price ceiling. Above $75 to $100 per ounce, substitution accelerates drastically. That's when research programs get funded and alternative materials reach commercial scale faster. Here's the doom loop for silver bulls. The demand increases, prices rise, substitution becomes compelling at that point, then demand decreases, prices fall. So what's the realistic view? I think silver does likely appreciate between 2 to 4x over the next 5 years, not the 10 to 15x that some bulls are projecting. Those bullish projections assume that substitution is not possible, and we're seeing that it is. What we're seeing is that it's difficult to substitute and it's time consuming, right? But people are doing it. When the financials, when the economics are right, there's encouragement and incentive to produce those substitutions that bring the demand for silver down. But look, 2 to 4x is still significant, and it's basically because of the supply constraints we have right now. So here's what I learned at the Real Vision Crypto Conference in Miami. Bitcoin is going up long term. I believe in that. But this isn't Bitcoin's year for explosive growth. The money that normally flows into altcoins has flowed elsewhere. Silver has a structural supply problem. 5 consecutive years of deficits. 820 million ounces consumed from stockpiles. Supply can physically not respond because the production is a byproduct of producing or mining for other metals. Also, new mines take a decade to build. So silver has exponential demand drivers. You got solar, you got electric vehicles, you got AI, you got mobile devices, all growing rapidly, all requiring silver, and all with that price inelasticity because there's such little amount of silver on these devices. But let's not forget, substitution is real. Copper in solar cells, carbon material in electronics. I think that creates a ceiling on how high the price of silver can go. So I think that 10 to 15x is a bit extreme, 2 to 4x is more realistic. Silver beats gold for this thesis because gold hasn't got an industrial demand driver. Silver sits at that intersection of store of value and technological necessity. So silver beats Bitcoin for this thesis. Bitcoin is speculative with no physical utility. Silver is tangible, irreplaceable in certain applications, and it faces a supply crisis. I attended that conference with no interest in precious metals, and I left thinking that silver probably deserves a place in my portfolio before additional Bitcoin and before gold. Now, I'm not a financial advisor. This is what I learned, what I found compelling, and what I am considering. but do your own research. But if you care about tangible assets that play a key part in the technologies we're building, don't underestimate silver. I've put together a simplified research document covering this thesis. The supply constraints, the demand rises, the substitution risks, the key points, all in one place, no jargon, written for founders and tech people, not finance people. If you want to check it out, the link is in the description. If this was useful, if you appreciate content that goes beyond the surface level and does a bit of a deep dive now and again, like and subscribe. I share what I learned along the way, business, technology, and the principles behind both. I went to Miami for crypto insights, and I came back thinking about the metals inside every solar panel, every electric vehicle, every smartphone, and every data center. Sometimes the most valuable insights come when you least expect them. See you in the next one.